A breaker is one of the most powerful patterns in trading, and after studying and taking thousands of trades at this point using breakers, I'm going to expose all the secrets and gems that I've learned over my career when it comes to mastering breakers for your trading success. But before I tell you all the gems, make sure you guys are following me on Instagram at Arkhamtrades and leave a comment below saying you've done so. Thank you. What makes the breaker such a powerful pattern inside the marketplace is because the breaker is one of our first indications of a reversal taking place. As you may know, a breaker is a reversal pattern. A bearish breaker can take the formation as a high, low, then higher high, and as we break below this low right here, as price comes back and retraces into that low level, that's a resistance to then take short inside of the marketplace for that continuation lower. And a bullish breaker can look like this: a low, high, lower low, and as we break above this high here inside of the marketplace and price comes back down into that high level for a retracement, that offers support for a continuation higher. And we can see here in this example on the daily time frame, we created this high, low, higher high, and as price broke below this level, this then becomes our bearish breaker. And you can clearly see as we came into that breaker level, we quickly ran away from it. This is a great indication of a reversal happening inside of the marketplace. Mind you, this is on the daily time frame. So if we can reverse on the daily time frames based off of the breaker, you know that this is very, very good. Now let's get into our first secret, and that is the inversion order block. So as we may know, a bullish order block is a last down close candle before a strong push higher. And as price comes back down into that last down close candle, it should offer support to continue higher, right? What if I told you if that bullish order block then fails, it can actually act as an inversion for that retracement lower? And also, what if I told you that last down close candle in a bearish breaker is actually a failed order block, meaning a breaker is simply just an inversion order block? So as an inexperienced trader trading the breaker, I will always suggest you to take the trade as price retraces back into that breaker level. So as you can see here, we have this high, low, higher high. We broke below that low. I'll tell you to take the trade as price retraces into that lower level for the short as a new breaker trader. But as an experienced trader, I'll actually take the trade as I notice we've broken that last down close candle and given that inverted order block. So as you can see here, we have this high, low, higher high. As I notice that we're breaking below this low, I'll actually take my trade way before the retracement for that short, anticipating it becoming a breaker based off of the inverted order block. And as we give the retracement, I'll simply just scale into my position as an experienced breaker trader. So for the newbie trading the breakers, I would always suggest that you trade based off of the retracement, but for a more experienced breaker trader, you want to take the trade as we break below that last down close candle for that bearish breaker. So on the 1 hour here, we have this high, low, higher high, creating this as our bearish breaker. From the highest body to the lowest low, this would then be our bearish breaker. As we can see here on the 15-minute time frame, we closed below that order block level, making this an inverted order block. So I'm actually going to take my trade here inside of the breaker, not waiting for the retracement, simply taking it inside of the breaker, anticipating this becoming a breaker based off of that inverted order block theory. As a new beginner trader, I'd want to suggest that you wait for the close below and then take the trade based off of the retracement. But as an experienced breaker trader, I'll actually take the trade inside of the breaker itself before it even has to close below it because of this inverted order block theory. As we broke below that last down close candle, this now suggests to me that this order block level, which was supposed to hold as a bullish order block, did not hold. So more likely than not, this is a bearish breaker. So I'm gonna take the short inside of that bearish breaker, anticipating that continuation lower. And if we can get some type of retracement, I'll only scale into my position. And let's see what happens from here. Price immediately rips down to take profit, just like so. Now for our next secret when it comes to breakers is standard deviations. What if I told you that you could use the breaker to predict where price is going at? meaning you could take the trade inside of the breaker and use that same breaker, and with just the Fibonacci, predict where price is going to create the market top and bottom. So you can not only use the breaker as an entry model to take your trades, but also an exit model to know when to get out of your trades. So on the 1 hour time frame, we can identify this bearish breaker right here. Now pulling out our Fibonacci, if we go from low to high, the lowest wick to the highest wick of this H1 bearish breaker, we get our Fibonacci levels. And you guys can pause this part to take a picture of these levels. So I can identify this breaker as an entry model. I'm going to go short inside this breaker. I'm not going to wait for retracement. I'm going to take a short right here inside this breaker because I know it's going to be a breaker premeditated. Plus, if we use our Fibonacci, we can get these levels to predict where price is going to create the low. But you may ask, which levels do we use? We use the levels based off of liquidity, and the liquidity pool that I'm going to use is this low. And we can see here we get that negative 3.5 level near this sell side liquidity. Now you may ask, why did I use this low instead of this low? I use this low because this is a short-term low and this is an intermediate term low. An intermediate term low is simply a low with two lows to its left and its right. Price is most likely going to take out the short-term low, but it's more so of a 50-50 of taking out this intermediate term low. So this is why I'm going to take profits at this short-term low instead of this intermediate term low. As you can see, we have a low here and a low here. This makes this an intermediate term low. I'm going to take profits at this low instead of this one. Coming down to a 15-minute time frame, we can identify price has broken below this low, making this now a inversion order block, as well as we can identify this bearish fair value gap. And this gets us into our next secret, which is the unicorn model. This model consists of a breaker with a fair value gap inside of that breaker. This is one of the best strategies there is to trading, because these two entry criteria, the breaker and the fair value gap paired together, is very, very lethal when it comes to not only getting precise entries, but the additional confluence of that fair value gap only makes the probabilities of price finding rejection at that level even higher. So we have this inversion order block, which we broke below this last lows, plus we have this bearish fair value gap here, and we have our standard deviations below us. So I'm going to take a short here as we enter back inside of this bearish fair value gap plus inversion order block level just above this low. And the reason why I put it just above this low is sometimes we can actually catch the bottom with these standard deviations, and because we're so precise as ICT traders, price doesn't end up filling us in because of spread. So we want to put our take profit just above the low to make sure that we actually get filled on the trade. I'm going to put my stop loss just above this bearish breaker as well as fair value gap, and let's see what happens. Price comes into that bearish fair value gap just like so. And then eventually price comes all the way down here into our targeting perfectly. As you can see here, perfectly to the tick. But because we're so precise, we put our take profit just above it, because if we set our take profit down here, it might not have filled us in. So this is why it's very important to do so. Very, very solid implementing that inversion order block plus bearish fair value gap with the standard deviations. Very clean. Our next example here on gold, we have this bullish breaker, this last up close candle before this lower low, and as we break above it, this then becomes our bullish breaker. Now we've identified our breaker, let's use our standard deviations. So from low to high, we get our standard deviation of 3% above this high. And the reason why we use this high is because this is a short-term high and this is the intermediate term high. Seeing this high have a high above this high and this high, this makes this an intermediate term high. So we're going to take our profits at this high because we know price is going to come up and take this high, but it has less likelihood of coming all the way back up here to take this high. Now let's go down to a lower time frame and see if we can identify a fair value gap inside of this breaker level. And what we have here is an inversion fair value gap, just like the inversion order block here. As we broke above this last up close candle, we have this inversion fair value gap, where this is a bearish fair value gap, broken above, now turned bullish fair value gap, which we'll mark out here. So I'm going to put my limit order at the bullish fair value gap inside of this breaker level. Stop loss just below the fair value gap, targeting just below that buy side liquidity, just in case we're a little too precise. So we're anticipating price to give this retracement into this bullish breaker plus fair value gap level to see that continuation higher into our standard deviation. Let's see what happens. Price immediately gives that retracement into that inversion fair value gap level. Let's see if it runs from here. And we ended up catching the high just like so. Very, very solid. If you guys are looking for more in-depth lessons and secrets when it comes to ICT and SSC concepts from an advanced trader, as well as other benefits like live trading, daily market forecasting, trade management plans for profitability, as well as psychology lessons, and a community of 100+ active traders, join my private mentorship at patreon.com/tradersasylum or the first link in the YouTube description. I'm Arkham. Be safe.